Exercise number 10 on page 44. So this is an aging analysis of accounts receivable. So Cohen, a large department store located in a metropolitan area, has been experiencing difficulties estimating its bad debts. The company has decided to prepare an aging schedule for the outstanding accounts receivable and estimate the bad debts by the due dates of its receivables. So it gives you a table here. You're to use the analysis to compute the estimated amount of uncollectible accounts, and then in number 2, requirement number 2, prepare the journal entry to record that under 3 different scenarios. Either there is 0 left over in the allowance for doubtful accounts, there's a debit balance of $3,000, or a credit balance of $2,800. So the first thing you're going to do is create your table. So you have greater than 30 days, you have 31 to 60, 61 to 120, 121 to 240, 241 to 360, and then greater than 360 days. The balance in each of these categories, you have 193,000, 114,000, 73,000, 41,000, 25, and 19. And that makes up the 465,000 balance in accounts receivable. So then you have your estimated percentage. So for the accounts that are current, less than 30 days, you estimate 1/8 of 1%, an eighth of 1%. So 0.008. For the 31 to 60, it jumps up to 2%. And then 5% for the 61 to 120. And then 20% for the 121. And then 35%. And lastly, 60% for the greater than 360 days. Okay? I got those backwards. There we go. All right, multiply that out, you get the amount. Bless you. Uncollectible. And you're just simply multiplying. Multiply the 193 times 0.008. You get 1,544, 2,280, 3,650, 8,200, 8,750, and lastly 11,600. That gives you a required balance in the allowance for uncollectible accounts of $35,824. So your journal entry is going to be a debit to bad debt, and a credit to the allowance for doubtful accounts. When you're taking the balance sheet approach, as opposed to the income statement approach where you just multiply total credit sales by some percentage, you always have to take into account what the existing unadjusted balance is in the allowance for doubtful accounts. So in scenario A, in requirement 2, if it was 0, then you're going to debit $35,824. What about scenario B, where you had an unadjusted balance in the allowance for doubtful accounts of $3,000, a debit balance? 38. You're going to add it. And if it had a credit balance of $2,800, you're going to reduce it from the $35,824 required balance down to $33,024. That's it. Questions on this first one? Let's do another one that is slightly more complex, just to make sure you understand the aging. We're going to do problem number 9 on page 51. So problem number 9 on page 51. Oh, bless you. All right, on this one, it tells you that on September 30th, 2013, the end of its current fiscal year, Ludkin Corporation reported accounts receivable of $331,750 and an allowance for doubtful accounts of $16,700. That was at the end of last year. During 2014, the following transactions occurred, and it tells you how much they sold in credit sales, terms, and EOM. What are terms of EOM? Anybody guess? End of month. So whatever was sold during the year, their customers had to pay them by the end of the month. And then they have collections on those receivables as well as a balance in the accounts receivable that was written off during the year. So the first thing we need to do is create a couple of T accounts. We have accounts receivable and the allowance. Allowance for doubtful accounts. So at the end of last year, you had $16,700 credit balance on 9/30/13. and then you had a balance of $331,750 in accounts receivable on that same date. All right? Throughout the year, you sold $2,017,800 in credit sales. Due net EOM, end of month. And of that amount, you collected $1,956,000. You wrote off $16,200 in uncollectible accounts. So that leaves you with a credit balance at 9/30/14 of $377,350 and an unadjusted balance of $500 on that same date. Credit balance in the allowance for doubtful accounts. All right, everybody with me so far? That's just the information the problem gave you. So this $377,350 balance, they break it down between under 30 days, 31 to 90 days, where the old problem was 60, and then 91 to 180 days, 180 to 360, and then greater than 360. So they're only using 5 layers where the last problem had 6. So you have $169,250, $100,000, $55,900, $38,200, and $14,000. For a total of $377,350. So the uncollectible percentages, just like the last problem, 0.8 of 1% for the less than 30. 1.6% for the 31 to 90. And then it jumps to 5%. The 180 to 360 is 15%. And then 40% for the excess over 1 or 360. Same exercise. Extend it out, multiply the amount times the estimated percentage that's uncollectible. You get 1,354,000. Not 1 million. 1,000. 1,600, 2,795, 5,730, and 5,600. For a total of $17,079. So the balance in the allowance for doubtful accounts has to be adjusted to $17,079. That's what your analysis tells you. So how do you get from here to here? $16,579. God bless you. So a debit to bad debt. for $16,579 and a credit to the allowance for bad debts, for uncollectible accounts, doubtful accounts. So that's one type of the two problems that this chapter generates. Because on the midterm, there'll be two problems out of this chapter. One will be an aging of accounts receivable, calculation of bad debt expense. Right? So that's a gimme. Merry Christmas. Huh? Yeah, and it's similar to the homework for this week.
This is for next week.
That's for next week. We'll start lecturing on that Thursday. Okay? All right. Actually, no, the homework's a bank rec, not a allowance. I'm pretty sure. Is it? Yeah, it's a bank rec, right? Yeah, that's what I'm doing next. Yeah, that's what the problem is. The homework. Okay. Let's go back to exercises 6-23 on page 42. (6-23) on page 42. Exercise. Okay, Odom Company's cash account showed a balance of $17,198 on March 31st, 2013. The bank statement balance for the same date indicated a balance of $17,924.55. So when you're approaching this, you're going to start with the balance from bank statement. And then you're going to add certain transactions, and you're going to deduct. And then you're also going to start with the balance from the company's books. So the company started with a $17,198, whereas the bank has it at $17,924.55. You're going to add and deduct. So the whole purpose of a bank reconciliation exercise is to determine of the information that you're provided, which of these two entities knows about that information. Who knows about it? Does the bank know about it, or does the company know about it? Because whoever doesn't know about it, you need to make an adjustment to their bank, to their balance, because they don't know about it yet. All right, so you're just going to split it between the two. Let's start. The first one, undeposited cash on hand on March 31st amounted to $724.50. Is this something the company knows about or the bank knows about? The company knows about it. It's undeposited cash, the cash that they've got in their cash register drawer. So they certainly know about it. So you need to add that to the bank balance. Undeposited cash. $724.50. A customer's NSF check for $173.80 was returned with the bank statement. Non-sufficient funds. So a customer wrote you a check, you processed it, put it in the bank, and it came back. The company doesn't know about that yet because it came in the bank statement. So to the company's books, we need to deduct returned NSF. And that is $173.80. A note for $2,000 plus interest of $25 was collected for Odom by the bank during March. The bank notified Odom of this collection on the bank statement. Does the bank know about that? Yes, they collected the note. Does the company know about it? Not yet. We need to add it to the company. Note collected. By bank. So they collected a $2,000 note and at the same time collected interest of $25 on the note. Next item. A bank service charge for March was $15. Is this something the bank knows about? Yes, they charged it. So we need to deduct it from the company's books. Bank service charge. $15. A deposit of $951.75 mailed to the bank on March 31st did not appear on the bank statement. Is this something the company knows about? Yes, they processed the deposit. They put it in an envelope. They mailed it to the bank. Does the bank know about it yet? No. So we need to add it. Deposit in transit. $951.75. Then it says the following checks mailed to creditors have not been processed by the bank. So you identify these by, you take the bank statement and it lists the check numbers of everything that cleared, and you go to your check register, your cash disbursements register, and you click off every one that's cleared. And anything that hasn't cleared is an outstanding check. And these are all items that the bank doesn't know about yet. How could they? So 432, 433, and 434. For $57.40, $147.50, $214.80, and $191.90. Then the last item, a customer's check for $149.50 in payment of his account and listed correctly for that amount on the bank statement had been incorrectly recorded in the accounting records as $194. So there's a transposition error. But the mistake was on the company. So if it was listed correctly on the bank statement, the bank knows about it. They process the check and they correctly put it into your checking account at the $194.50 amount. The mistake is on your books. And you recorded it too high. You recorded it too low. So you need to fix it. No, you put it too high. You put it as 194 and it should have been 149. So $45. Check. Incorrectly recorded. $45. And that's it. At this point, you add everything up. So all of the adds for the company's records add up to $2,025. Add that to the beginning balance from the company's records. You've got a subtotal of $19,223. Add up all the deductions from the NSF check, the bank service fee, and the check that you incorrectly recorded, and you get a negative $233.80, leaving you with an adjusted cash balance of $18,989.20. Add up all the adds to the bank statement for the undeposited cash and the deposit in transit, and you get $1,676.25 for a subtotal of $19,680. Add up all the outstanding checks, and you get a negative $611.60. And that leaves you with an adjusted $18,989.20. And all is right with the world because you're. No, if you just, wrote it down as 2025. The reason I split it out is the next step, because anything that is on the company's side of the reconciliation, you need to make a journal entry for. Because the cash balance, adjusted cash balance for your month-end reports has to be this $18,989.20. So we're going to go through, and I'll do it over here, and make journal entries for anything on that side of the board. So the first one, you need to debit cash, credit notes receivable, and interest revenue. So the debit to cash is $2,025. The note receivable was $2,000. And then you got $25 in interest revenue. For the deductions, for the NSF check, what are we going to debit for that? Accounts receivable. You need to put that invoice back into the accounts receivable subledger so that you know to collect it from your customer. Because you need to get back with them and say, listen, your check bounced. And we're going to add a $15 fee at a minimum, because the bank's going to charge you when you bounce a check. When somebody bounces a check on your account, you get charged also. It's not fair, but you do. So debit accounts receivable. For the NSF. For the $173.80. The bank service fee, bank fee expense, or your book uses miscellaneous expense, but I like separating it out. And then the check that was incorrectly recorded. Well, when you recorded that check, you debited cash for the $194.50 and credited accounts receivable. You now need to fix it. So you need to credit accounts receivable. I'm sorry, debit accounts receivable for the error. $45. And then the credit for all of this is cash. And that's the $233.80. And when you get finished posting those two journal entries, your cash balance as reflected on your adjusted trial balance will be that adjusted cash balance of $18,989.20. And that's how you do a bank rec. Isn't that fun? I'm telling you, you get into your first corporate America job, go to the controller and say, I want the bank recs. They're fun. They're going to think you're clinically insane, but they're on the fast track because nobody wants to do this stuff. And I've had 15, 20-year accountants that struggle with a bank rec. It's not hard.
So like when you get a bank rec, does like the bank send you stuff?
Yeah, they send you well, now it's all PDF. They used to send you a big thick envelope with the actual checks inside. All right? And so then, and they were in order. They were sorted in order of check number. And so you used to go print out the cash register and then sit there and one at a time go, okay, check number 452. And then you'd check to make sure the amount was the same, that what you had and what the bank cashed it for, because they printed along the bottom of the check the amount that they dispersed. And sometimes they made mistakes. Sometimes they made the mistake of, typing in 949 when it should have been 994 or something. So you always looked at the very bottom because they had magnetic ink that they used to print that on. Now it's all just a facsimile. It's just a PDF, and they show you the front piece of the check, and then it says at the bottom cash amount, and it tells you how much it is. So, and that's the same with yours. I mean, you guys, some of you write checks, right? Maybe, not really. It's just an ATM at this point, a debit card and an ATM. So, yeah, if you write checks, the facsimile of the front, because they don't physically move checks around the country anymore. Whoever got the check, and you can do the same when you get a check for Christmas, you just take a picture of it, right? on your phone and deposit it. Simple, boom, done. And then the check, you just write void on and fold it up and put it in a drawer. So the actual checks don't float around the country anymore. They used to. They used to fly them around in Learjets, believe it or not. They would put big bags of them and they would load them at night into these jets and fly them around the state. It's crazy. Complete waste of time and money. Now we just take a picture of it and off it goes. Okay? All right, let's do one that is significantly more complex, and it is very, very similar to your homework. And that's problem number 20 on page 55. Just like last time, we're going to start with balance from bank statement. And then we're going to do some adds and deducts. And this one's got a little bit of everything thrown in it. Gets kind of surreal, all the mistakes that the bank made. Actually, I take it back. 20 is your homework. Yeah. 21 on page 6 is the one I'm going to do. Almost. See, in my book, I highlight the homework problems. And I'm sitting there going, oh, hold on, that one's highlighted. So that I don't make that mistake. All right, on 21 on page 56. In auditing train company, you obtain directly from the bank train's bank statements, canceled checks, and other memorandum which relate to the company's bank account for December 2013. So it gives you all the items there. So starting, per the bank statement, you had $91,174.63. But on the company's books, you only had $59,088.46. Huge difference. And then there's 14 items needed for reconciliation. So the first one, outstanding checks. It just tells you the total of the outstanding checks, $33,378.82. So does everybody remember? Book or company? Bank or company? Bank, because the bank doesn't know about checks that you've written but haven't yet been produced. So outstanding checks. $33,378.82. Well, that'll chip away quite a bit of the difference. Number 4, receipts of 12/31/13 deposited on January 1/14. Where you found a bank open on New Year's Day, I'm not quite sure. But anyway, you deposited it on the 1st. $5,317.20. Deposit in transit. $5,317.20. Number 5, service charge for December, $23.50. Thank you. $22.50. I was trying to talk and take a drink at the same time. Bank or book or company? Service fee goes to the company. Bank service charge. $22.50. Number 6, proceeds of a bank loan on 12/15/13 was omitted from the company's records. It was discounted for 3 months at 12% a year. And that's going to be important when we get around to booking a journal entry. So the net proceeds that we received, because the bank discounted the note, there's 2 ways of you borrowing money from a bank. You can either borrow it, sign a note, and then pay them back the principal plus interest, or they love doing this, they'll take the interest out up front. Don't let them do that. It's a higher effective interest rate. And when we get to there's a whole chapter on payables, and I'll show you the difference. You're going to pay it higher, and the banks love you coming in. We'll just discount it. Take the interest out up front. Oh, okay. Don't do it. I'll prove it to you in some future chapter. So $11,640. Bank or company? Company, because you didn't record it yet. So you need to add proceeds from loan. $11,640. Number 7. A deposit of $12.20.13 was omitted from the bank statement. So this is bank error number 1. You made a deposit, and they didn't give you credit for it. So bank or book? Bank. Deposit omitted. $2,892.41. Number 8, a check of Rome Products Company charged back on 12/22/13 for lack of counter signature. So Rome has a checking account set up that requires 2 signatures. Very common in commercial accounts. So 2 people had to sign it, only one signed it. So your bank sent it back to them. It's the equivalent of an NSF because you couldn't cash it. It was then redeposited on 1/5. No entry was made for the chargeback or the redeposit. So, company or bank? We had a 50-50 shot. It's like an NSF check. Company. Rome Products. Because you had to physically send this back to Rome Products for a second signature. Number 9, error on bank statement in entering deposit of $12.18. The correct amount was $3,182.40, and they entered it as $3,181.40. So that's a bank error. On deposit. $1. Excuse me. Number 10 is my favorite. Check number 3917 of Trait Manufacturing Company. We're Train Company. So this is a completely different company. Their check got charged to our bank account. So it needs to be added back to the bank because it's not your check. They need to give that money back to you and go take it out of Trait Company. All right? It says the check of Trait Manufacturing charged in error to company's account. So it was charged to your account, so Trait check. In error. The good news is that in a little bit they give you a deposit that belonged to Trait also. Number 11, proceeds of note of J. Summers and Company was collected by the bank and not entered on the books. Principal of $2,000, $40 of interest, and a $5 collection charge by the bank. Company's books or bank books? Company. Proceeds of note. 2035. Almost there. 3 more. Number 12, an erroneous debit memo of 12/22 to charge the company's account with settlement of a bank loan, which was paid by check number 8714. In other words, you owed the bank $5,000 for a loan. You wrote them a check and gave them a check for the payment. And then they turned around and took it out of your account. Twice. Okay? So, this is another error that needs to be added back. Bank, debit, memo. 5,000. Error on bank statement in entering a deposit. It was entered at $4,817 and it was really $4,807. So here's another mistake, only this time it's in your favor. So bank error on deposit. $10. And then the last one is a deposit of Trait Manufacturing was credited in error. So just like they charged us with one of their accounts payable checks, they gave us one of their deposits. So this is trait deposit in error. $1,819.20. Add up all the adds, and you get 15,961 for a subtotal of 107,075.24. Add up all the deducts, you get 35,208.02 for an adjusted 71,867.22. Add up all the adds to the company's books, you get 13,675 for a subtotal of 72,763.46. Add up the two deducts, you get a negative 896.24 for 71,867.22. It's like magic. So, once again, anything on the bank side, on the book side, on the company's books, you need to make a journal entry for. So I'll do it quickly because apparently my battery's going low. So for the proceeds of the bank loan, that's just a debit to cash and a debit to prepaid, and I'll show you how I got this in a second, interest. And then a credit to notes payable. If you take the proceeds, all right, of $11,640 and divide it by 1 minus the interest rate. And the interest rate, it's a 12% note. All right, so that's 1% per month, and it's a 3-month note. So you're going to pay 3% in interest. All right? If you divide the $11,640 by 97%, you get a note payable balance of $12,000. You received $11,640, and that means you've got $360 in prepaid interest. Yeah, you've divided, that's the difference between the two. So that's how much interest they collected from you up front. Now that is also what you would have paid if you'd have gone ahead and paid the note directly. At the end of the 3 months, at 1% per month, you would have paid them $360. But it's a higher effective interest rate than 12% because the effective interest rate is dividing the $360 by the $11,640, because this is in essence what you borrowed. That's what you got. So that's going to be higher than 12%. So that's the first one. Then you need to record the collection of the note. So that's cash, debit to cash, bank fees, and a credit to notes receivable, and a credit to interest revenue. So the cash was $2,035. They charged you $5 to collect it. The note was for $2,000, and the interest was $40. Then you record the bank fee and the accounts receivable. And so the bank fee was $22.50. And then you need to add back that Rome that was only had one signature on it, $873.74. So the debit to cash is $896.24. And at that point, your cash balance will reflect the correct amount of $71,867.22.